domestic saving rate of 27% in South Asia and 41% in East Asian economies. This low saving rate creates a large gap between what we save and what we need to invest. And this is why we have had to rely heavily on foreign inflows to meet our development needs. But this reliance has come at a cost. Among other factors, it has contributed to repeated balance of payment stresses, instability in FX markets, and inflationary pressures. Over time, these recurring problems have weakened our growth momentum. In earlier decades, we saw economic growth of above 6%. In the past 2 decades, the average growth has been closer to 4%. Avoiding the boom-bust cycle requires us to mobilize more domestic savings and channel them into productive investments. This is where well-developed, deep, and diversified capital markets working alongside the banking system can make a difference. Ladies and gentlemen, with this background, let me now share my views and thoughts on the current state of capital markets in Pakistan and how their deepening can benefit our banks. Over the past 2 decades, Pakistan's government bond market has developed from offering only basic fixed coupon instruments to a broad range of securities, including fixed rate, floating rate, and Sharia-compliant options of various maturities. This evolution has created a reasonably deep and liquid sovereign yield curve, supported by regular auctions and active secondary market trading. However, the government bond market remains heavily concentrated within the banking system. Recently, the SBP has taken further targeted steps to broaden access and deepen the country's bond market. The primary dealer system has been revamped to include non-bank institutions and such as the National Clearing Company Limited and the Central Depository Company as CDC as a special purpose primary dealer, enabling them to bid directly in the auctions on behalf of the clients. The scope of investor portfolio securities accounts has also been expanded to microfinance banks, CDC, and NCCPL. This provides close to 100 million branchless banking and mobile banking users in the country the opportunity to invest in government securities. Account opening has already been simplified through the customer's digital onboarding framework. Together, these reforms aim to diversify the investor base, enhance liquidity, and make the sovereign segment more resilient. At the same time, these reforms are helping in laying the groundwork for broader capital market development. In particular, a deep and inclusive government bond market can serve as the benchmark for pricing other forms of debt, including corporate bonds. However, while the country's government bond market has been steadily progressing, the corporate debt market remains largely absent. Outstanding corporate bonds amount to less than 1% of our GDP, substantially lower than Asian countries. Also, most of these bonds are privately placed with minimal secondary market activity. Non-financial firms, as well as sectors such as manufacturing, infrastructure, and renewable energy, which could benefit greatly from long-term funding, remain almost entirely dependent on bank loans. The lack of vibrant capital debt market restricts businesses from accessing long-term financing on competitive rates, which also limit.
सहाफ़ी ख़वातीन व हज़रात का मैं बहुत शुक्रिया अदा करता हूँ कि आप CM हाउस में तशरीफ़ लाए और आज